Welcome to Growth Investing Mastery. This video will look at our August 2025 growth stock portfolio review. As a reminder, this is not investment advice or recommendations to buy stocks. The purpose of this video is to review our growth stock portfolio, and we'll jump straight into company discussions after we look at allocations and returns. This channel has a disciplined approach, which gets results. Year to date, our portfolio is up 80%, and since the start of 2024, the portfolio is up 343%. Taking a look at our allocations, we have three high confidence positions. First up is AppLovin with symbol app at 19.2%. That's followed by Iren with symbol Iren at 18.2%. Next, we have Astera Labs, ALAB, at 17.9%. We then have five medium confidence positions, with Electrovaya ELVA at 9.1%, Credo CRDO at 9%, RDDT at 8.2%, Dave with symbol Dave at 8.1%, and Health and Tech, HIT, at 6.1%. Followed by that, we have two low confidence positions, Hive Technologies with symbol Hive at 3.5%, and Zoomed Technologies with symbol ZOMD.V at 0.6%. And the .V there symbolizes the stock is on the Toronto Venture Exchange. The new positions this month are Iren, Electrovaya, Hive Technologies, and Zoom Technologies. We also sold 7 stocks, which is quite a lot, as some of these companies disappointed on earnings season. The companies we sold are Sezzle, Hims, Paymentus, Paysign, Cineverse, Nova, and Powerfleet. We added to our positions in Credo and Health and Tech, and we trimmed Reddit and Dave. We also trimmed Iren a bit after their earnings. I wanted to add that I really like this portfolio composition now, with 3 high confidence positions, 5 medium, and 2 low confidence positions. On previous videos, I had maybe 4 or 5 high confidence positions, followed by a whole lot of low confidence positions, and I really like this middle filled out now. Taking a look at our results, in 2024, we were up 146%. And in 2025, we're up 80% year to date. That makes the cumulative return being up 343% since the start of January 2024. And you can really see the power of the compounding taking hold when you have a couple strong years in a row. When we take a look at our plus 80% returns year to date, it's versus the NASDAQ being up 11%. And we're of course very pleased to get more than 7 times the return of the index so far. I found a better way to show the graph as well. There was a way to expand the graph in the app I have, and I think this displays a lot better. It really shows those peaks and troughs a lot better, and you can see how big the dip was earlier this year. But you can also see how strong the recovery was as well. And there was a little drop on the top right of the graph where I had to take some money out to start that ZOMD position on a different brokerage. It wasn't that big an amount percentage-wise, but I just wanted to make sure that I mentioned that to uphold the integrity of all my results. And for the entire rest of the graph, there's been no money added or removed. Let's take a look at one of our top holdings, AppLovin, with symbol app. They are an ad tech platform in the mobile gaming and web space. And their latest earnings was a perfect execution on numbers and narrative. And I wrote here, we can't make it into the S&P 500, but we made it into the park, which stands for Palantir, AppLovin, Robinhood, and Coinbase. AppLovin is starting to get some mainstream attention, as there was a news story. Are these stocks the next FANG? Jim Cramer thinks so. Even though the stock wasn't included in the S&P 500, it will eventually have to be added if it keeps growing. And that will likely provide a 10 to 15% boost in the stock price when that does occur. I wrote here that I can't get over the CEO saying the new product will have 0 churn. And he didn't say it would have a tiny churn or a really small churn. He said 0 churn. To me, that implies it would be a mistake to use any other ad tech besides AppLovin for your business. And the CEO added, Q4 will be a fun quarter. Q4 will be when their web platform is opened more broadly. One last thought I had was, is it possible AppLovin can take over the entire digital advertising space like they did with mobile game ads? Let's now take a look at Iren, our second highest confidence position. They are a neo cloud for high performance compute, and they also have a Bitcoin mining operation. The company reported earnings on August 28th, and the report showed the story is on track. The revenue numbers were basically pre-reported as Iren gives monthly updates, but the one new announcement here was there's a new status as an NVIDIA preferred partner, and the company's operations are reaching a 1.25 billion annualized run rate for the revenue by the end of the year, and 1 billion of that is made up of Bitcoin mining. The other 250 million is made up of HPC. I really like this quote from management in the latest conference call. They said there's a line of sight to billions in annualized revenue from our AI cloud business alone. And their leading service is with bare metal for larger, sophisticated customers. Another direct quote is, customers are demanding bare metal because it actually suits them better. There's a flexibility to layer in software solutions if needed for customers. And one thing I noticed from reviewing Nebius and CoreWeave, they were talking a fair amount about software and different software stacks they're setting up for users. I get the sense that Iren is targeting bigger customers who don't need their hand held as much. Iren mentioned they have 3 key advantages. The first being they control the infrastructure, the second is performance, and the third is cost. They also said that co-location customers know how to operate the clusters at scale. One last quote I really liked was, our whole business model has been around cheap optionality. And this means they can host Bitcoin mining, they can host high performance compute, or they can host the next technology stack as it's released. And maybe one small ding against them in this earnings is they said they're reworking some of their 200 kilowatt racks. The customers didn't need the support for that much power yet. But it sounds like their designs are pretty modular and they can adapt without a lot of capex for this. Overall, I was impressed with the report and profitability came in higher than expected. I would like to see Iren make some customer announcements over the next couple months, as it seems like that's what the market is looking for to push the stock price higher. Our third high confidence position is Astera Labs with symbol ALAB, and their product is AI Infrastructure 2.0. They've referred to their Cosmos software platform as the nervous system or mothership of the data center. I like this visualization a whole lot, and it sounds like Astera's products may be able to control the whole data center. Another thing I liked from this latest earnings is the narrative changed from a strong 2025 to huge ramp-ups in 2026 and 2027. It seems like they have a lot of visibility for their products. Astera is emerging as the leader of the UA-Link consortium, a new standard for AI hardware. The company is agnostic about any product changes, as they can build whatever the customer wants. The numbers came in really strong on this latest earnings report as well. Profitability is stepping up with 52 million of net income. The company already has over 1 billion of cash on the balance sheet, and that number is only growing as they're GAAP profitable now. I wrote here, it would be great if they can announce a new product line. When they announced the Scorpio product line, the stock was up significantly. Getting into our medium confidence positions. First up is Credo with symbol CRDO. Their product is AI infrastructure, and I'm expecting a strong earnings on September 3rd, with customer concentration coming down. The company guided revenue to be between 185 and 195 million. And if you've followed my strategy videos before, you know I like to make a guess where the company will land. And I'm guessing the company will come in around 220 million of revenue and then guide for 235 to 245 million of revenue in the next quarter. And if they are able to land at these optimistic guesses, I think the stock will likely rally. The company has a new software platform called Prism, which sounds pretty promising. This company does have some persistent yellow flags that are preventing it from becoming a higher confidence position, though. The first is that the headquarters is in the Cayman Islands, and I'd really like to see them re-domicile to the US or somewhere more reputable. Another yellow flag is that Amazon makes up 61% of revenue in the latest quarter, and while it's unlikely, Amazon could rug pull them any quarter. The third yellow flag is the CEO has done a poor job communicating. He gave no heads up on the customer concentration 2 quarters ago, and he didn't really introduce the software platform too well. But my big takeaway is that it's hard to find any businesses that are growing as fast as Credo. And we'll continue to stay invested if the numbers continue accelerating. Our next company is Electrovaya with symbol ELVA. This is a new company I'm really excited about. Their product is lithium-ion batteries, and they have a big competitive advantage. Revenue last quarter was 17.1 million, which was up 67% year over year, and the company is already GAAP profitable the last 2 quarters, which is unusual for a battery maker at their scale. The company has large industrial customers like Walmart, Target, and Dollar General. A lot of their batteries are going into things like forklifts, which used to have lead acid batteries that don't perform as well and are big safety hazards. Electrovaya is based out of Canada, but they're currently expanding in Jamestown, New York to 3 times the capacity. And they've confirmed the supply chain in Jamestown will be 100% US sourced if that's an issue. The total addressable market for lithium-ion batteries is bigger than that of solid-state batteries, and this is a key point. Because now Electrovaya is entering the solid-state market as well, competing with companies like Amprius and Enovix. And we're deeply familiar with those companies, so it's good to know the competition going in. One thing that really stood out is that management said they will outcompete in performance in the solid-state area as well. And when we do our industry comparison, Amprius has a market cap of 1 billion, Enovix 2 billion, and Electrovaya is just 200 million. Both competitors have less quarterly revenue and less profitability. Yet their competitors are valued at 5 to 10 times as much, which creates a huge opportunity for us here. Management was asked about guidance on their latest call, and they flat out said, "We're going to beat that guidance." It's very unusual for a company to say something like this, but it's a really good sign when they have this much confidence that they can flat out say that guidance is a pretty easy beat. Our next company is Reddit with symbol RDDT. Their product is social media for community. And this company has really become more of a numbers story for me recently. Revenue in the latest quarter had been guided for 430 million on the top end, and they beat that by 70 million to get to 500 million of quarterly revenue. However, my original thesis on this company centered around 3 pillars of growth, which were 1, advertising, 2, selling anonymized data, and 3, translated pages. On that second point there about selling data, they call that other revenue, and in this latest quarter, other revenue was up 24% to 35 million. But when we look back exactly 1 year in Q2 of 2024, other revenue was 28.1 million, which was up 690% year over year. And we really love to see these jaw-dropping statistics where we have to double check that it's not a typo for what they're saying. So we went from a jaw-dropping statistic to 24% year over year, which is pretty disappointing. But one thing I did like was that management admitted the strategy and thesis are not working as hoped. And what I would like to see is for Reddit to rethink this strategy and announce a new product for the data. The issue is their original thesis was that the data was super valuable to AI companies, but it looks like that's not the case. If they're able to come out with some sort of SaaS platform or subscription service for their data, that would really convince me to make this a high confidence position again. Additionally, on the translated pages, that pillar of growth seems chopped down a bit from my initial take. Reading between the lines on the conference call, It seems like the translations don't show up in Google as well as they had hoped. Also, I had a bit of a naive viewpoint on this to start with. When they mentioned they would be translating their corpus into languages such as French, I thought that was going to bring online a lot of new users. But I think the use case is more like there's a French person who's sort of weak in English skills, and now they can communicate and participate a bit better in French. So it's not really a completely new user joining the platform. It's a more engaged user using their native language. Overall, the narrative is weakened a bit for me, but the numbers outperform greatly. Our plan is to keep Reddit as a medium confidence position for now. Our next position is Dave with symbol DAVE, and their product is a membership-based bank. Last quarter's numbers were well above analyst and my expectations. However, momentum traders won the day, trading the stock heavily down after hours, and that creates an opportunity for us. The company's 64% year-over-year revenue growth is the highest they've ever posted. And they were able to raise their membership fee from $1 to $3 without any pushback. They did a lot of extensive market research and testing to make sure their members could handle this. My one big concern is that membership numbers only grew 16% year over year. And I'm left wondering, are they juicing more out of their users, or did the new fee structure do a one-time boost to their numbers? But the numbers are so strong for this company that I'll hold with them until they have a bad report or bad numbers. Our last medium confidence position is Health and Tech with symbol HIT. And they're a B2B insurance platform for small businesses to get customized healthcare plans. There were some concerns raised this month on Sol's board regarding some loans that Health and Tech took and issued. One board member reached out to investor relations and was able to have a call with the CFO. Most of the questions were answered sufficiently, and it was enough to maintain my confidence in the company. I also like that the CFO was willing to take a call with an individual investor. And that collaboration in action really shows the benefit of Sol's board. Another thing I'm looking at with this business is that management told us to look at the press releases for new announcements. They're supposed to have some big product releases. It's been about a month and a half since they said that, and I would really like to see them follow through with that hint they gave on the last earnings call. So hopefully they can announce a new product in the next month or so. And just to keep in mind, this stock is a microcap and it's quite volatile and may move around a lot. I'm unlikely to modify my position until next earnings. I really want to see what they report next. I added one detail at the end here that the stock could gain momentum if it's able to break through the $5 price. The reason for that is a lot of institutional money will not invest in a stock that has a share price below $5. Also, some services like Investors Business Daily will only include a stock in the IBD 50 if the share price is above $5. Taking a look at one of our newer low confidence positions, we have Hive Digital with symbol Hive. They are a Bitcoin miner that's switching to high performance compute. Revenue in the latest quarter was $46 million, which is plus 41% year over year. And they're a Canadian-based company that operates out of Canada, Sweden, and Paraguay. The market cap for this company is $800 million, and they got a great deal in Paraguay after Bitfarms collapsed. And Bitfarms was another Bitcoin mining company that was improperly recognizing cash flows, and they got hit up with security fraud charges. And that's something we need to be really careful with these companies which are handling Bitcoin. They can either have custodial issues or accounting issues potentially. The company has 430 megawatts online, which is a whole lot for their market cap. And their hash rate is 15 exahash, which is also a lot for a market cap of 800 million. What I really like about this company is they're already hosting hoppers and previous generations of A100s from NVIDIA. And they have a software connectivity platform called Buzz, so they seem quite well set up for this transition to HPC. The last company we own is Zoom Technologies with symbol ZOMD.V. ZOMD.V. They are a marketing and acquisition SaaS platform, and they're a microcap SaaS company on the Toronto Venture Exchange. In the latest quarter, revenue was $19.6 million, which was up 40% year over year. Profitability really shines for this company. They had $5.5 million of EBITDA in the last quarter and $6.1 million of GAAP net income in the latest quarter. The last two earnings reports have been pretty impressive as they scale up, and I am treating this like a venture company in my portfolio. What that means is I'm unlikely to check in much before their next earnings, but we plan to hold until their next report. Taking a look at the companies we sold this month, the first up was Sezzle. They are a buy now, pay later solution that has a lot of rewards for their users. And this quarter's numbers really stink. There's no way to spin it. I didn't even bother waiting around to hear the call with revenue coming in less than 100 million. My expectations for this company were really high, and I was thinking they would be able to get over 120 million of revenue or even more this quarter. I thought this business had a lot more momentum than they did, and there were some warning signs for this business. Q4 to Q1 user growth was not impressive. In retrospect, it seems like the WebBank partnership was a one-time boost to revenue and profitability. Management has changed how they count customers twice now, and obscuring and changing metrics to trick investors came back to bite them this time. Another long-time holding that we sold this month was Hims and Hers Health, with symbol HIMS. They are a telehealth provider with customized solutions. And I wrote here, the growth is over in this business. They added 77,000 customer ads in the quarter, which is tiny for a business that was getting 160K or 180K ads in a typical quarter. And they tried to spin things really badly. They said things like, "We saw volatility in our marketing efficiency." And that's just a nice way to say they are completely clueless about their marketing efforts. I also wrote, international expansion is a pipe dream. They said it was too complex to add insurance to their platform for the US. But in this latest call, they said they're going to expand to Latin America, Asia, and South America, in addition to Europe. And this just seems like a poor business plan. There's different cultures, languages, insurance, and there's less disposable income. It would be a lot better for this company to try and gain legitimacy in the US more. One more company we sold this month was Paymentus with symbol Pay, and they're a SaaS payment provider for billers to collect from their users. The story management has been telling us is they're onboarding large customers for 3.5 quarters now. And management told us repeatedly, these large customers are ramping faster than expected. So we should be seeing a big step up in year-over-year revenue at this point. Yet the guidance for next quarter is plus 22% year-over-year growth. And here's a quote from the call, which sums up everything. They said, "We do not like to count our chickens before they hatch." And I wrote here, I do want a company that can count chickens ahead of time. And it seems crazy to me they can't even project how the next quarter will look. The story they are telling no longer lines up with the numbers. I also realize they have never given us any numbers on the large customers. So we have no idea on the size of the deals or the quantity of the deals. Additionally, they keep giving away discounts to customers, and I'm not sure why. They say that's the industry standard, but they also say their product's really compelling and everybody needs it. So again, it just doesn't make sense. The next company we sold was Powerfleet with symbol AIOT, and they're a SaaS vendor for physical tracking of assets. The company is the result of a tri-merger, or 3 companies being combined. And everything with this company is priced for the company not to grow. But the stats they told from 2 quarters ago tell a different story. They said AI video pipeline grew 120% quarter over quarter, and the data highway platform grew 50% quarter over quarter. New logo pipeline grew 121% quarter over quarter. My conclusion is, where are the results? Revenue was flat quarter over quarter, and they said they had this huge pipeline growth, which seems like it should be showing up. My guess is that some of the businesses are cannibalizing clients from the other parts of the business. And I wrote here guidance was raised in quotes by bumping up the lower end of their guidance range. And typically companies should be saying they're tightening their guidance range, not raising it here. And they basically played the algorithm by saying this is a raise, but the price will have to be paid at some point. And what this means is a lot of trading algorithms will look for that quote of raised guidance or raised, or we're going to raise something. And the trading algorithms will start buying the stock when they see that word. But the company is going to have to pay the price at some point for doing that. And it could be next quarter or 2 quarters from now if they're not able to grow. And one common mistake here for growth investors is to become a value investor now. I've mentioned when we compare this company to Samsara, their biggest competitor, that this company seems like it should be worth a whole lot more. And I could see this company being worth $2 billion tomorrow. However, we need some catalyst usually for the market to wake up to the opportunity. And typically that's an earnings report. So we'd really like to see this company post a strong earnings where they can actually raise guidance before we'll reconsider them. One low confidence position we sold was Paysign, with symbol PAYS, and their product is a fintech solution for pharma and plasma centers. I wrote here, we were wrong about the growth, but we were right about the value. And we saw an undervalued business with a lot of growth potential. But the growth turned out to be non-existent. Now it looks like there will be 3 consecutive quarters of flat revenue. The stock was up 130% for holding for just 2.5 months though. It's great to get a result like this when we were completely wrong about the growth. This month, we sold a company called Nova with symbol NVMI. They are a semiconductor solution for measuring. We may have read too much into the growth narrative behind this company. It now looks like there will be 3 quarters in a row of similar revenue numbers, or no quarter-over-quarter growth. And the simple conclusion was the growth we were looking for was just not there. It sounded like this business had a lot of momentum, but it's important to admit when we're wrong. One company we were completely wrong about was Cineverse with symbol CNVS. They are a movie and streaming platform as well as a content distributor. I got completely fooled by this narrative. None of their story is adding up. Revenue in the latest quarter was $11.1 million, which was up 22% year over year. And they have very poor profitability now, with EBITDA of negative $2.6 million and net income of negative $3.6 million. They were supposed to have a ton of different products launching, and management was mentioning all sorts of diversified revenue streams, including a SaaS product. Throughout the quarter, they had tons of big press releases, and I thought because of that, they were making a lot of progress. But now I'm realizing instead of doing actual work, they were just making press releases. The company is now talking about Terrifier 3 DVD sales, a movie that was released 6 months ago, and they're still trying to catch some steam from that movie. My conclusions were that management way oversold the prospects in the near term, and I lost all trust in this management. And we would need to see some seriously big results in the numbers before we would want to reconsider this company. Taking a look at some promising new ideas, the first up is Halozyme Therapeutics with symbol HALO. I learned about this stock from a fellow investor who goes by Ryshab on Salzboard, and his Twitter handle is @RyShabTalks. He's been doing a great job finding some new ideas and is a good person to follow over on Twitter. And getting back to Halo, they have a drug delivery platform. This allows for rapid delivery of biologic drugs, which are faster than an IV. And what I really like about this business is there's a lot of partners, licensing agreements, royalties, and bulk API sales. Their guidance was raised somewhat significantly, so it seems like the platform is taking off. However, I am somewhat concerned about the regulatory environment, as some of their customers depend on Medicare and Medicaid, which have some uncertainty right now. Another new idea we discovered this month was Curiosity Stream, with symbol CURI. And they are a global streaming service for factual content. Their content is evergreen, and it's great for parents, educators, and corporate clients. The market cap for this company is $250 million, and revenue was $19 million in the latest quarter, which was up 53% year over year. The company does pay a 6% dividend, which is a bit strange for a growth company. So I'm not too sure on the historical reasons for why they're paying such a large dividend. My issue with the company is that management is projecting next quarter revenue to be between 15 and 18 million. However, their story sounds really positive and it sounds like they're doing really well. So this doesn't seem to line up with having a sequential decline. And that's why I'm so unsure here. Next up, we looked at a company called dLocal with symbol DLO. And they're a payment processor in emerging markets, which just posted an incredibly strong quarterly number. Revenue was 257 million, which was up 50% year over year. And the prior quarter was 217 million. So it had a pretty big step up here. The company also had strong profitability with GAAP EBITDA of 61 million and net income of 43 million. However, even with this strong of a quarter, the 4.3 billion market cap feels pretty big for this company. I say that because companies like Remitly or Paymentus, they have about this $4 billion market cap as well, but they have more revenue and the customers are a bit stickier. Moving on to some more promising ideas. First up, we have the Real Brokerage with symbol REAX. And they are a real estate broker who got back on my radar after having a 48% quarter over quarter revenue jump. But I'm having trouble figuring out how they got this much quarter over quarter revenue. It just doesn't make sense to me. At first, it seemed related to this acquisition of Fly Homes, but that did not close in this past quarter. It seems like Fly Homes is going to open up a lot more inventory for the Real Brokerage, but I couldn't really piece together that timeline. The company's ancillary services, such as titling, make up still only 1%, and that includes their wallet as well. I was really hoping these ancillary services would have ramped up by now, but it doesn't seem like that's the case. I'd like to see this company get over 10% gross margins at least and prove they can upsell on some of their other products. The next company we looked at was Solescence with symbol SLSN. And this company is a B2B seller for minerals that go in different skincare products. And this company seemed really promising to me at first. The revenue was 20.4 million, which was plus 56% year over year, and positive net income of 2.7 million, with a market cap of 250 million. One concern I did have with this business is they did say some supplies come from China, and that will be impacted by tariffs. They were unable to say what type of revenue impact it would have, but they did say it would have an impact on revenue. So I'd like some more clarity there first. And the other thing that was a red flag for me on this company was they've had no CFO since October 2023. And the CEO has served in a dual role of CEO and CFO. But I really don't like companies which are a one-man show, as I call it, where everything relies on this one person. We really want to see a strong team, and it makes no sense they can't find a CFO. Another company we were interested in was called Optimize RX with symbol OPRX. They have a platform for integrating electronic health records. Their latest quarter's revenue was 29.2 million, which was up 55% year over year, and their GAAP profitability caught my eye. However, their guidance for the rest of the year implies their revenue will be flat going forward. And that's really my big concern on this company. I'm just not that confident that management's actually sandbagging here and underselling. So I think they might be not seeing as much growth as I originally thought. Let's take a look at some conclusions for the month of August 2025. We had a whole lot of shakeups in our stocks, and we sold 7 stocks, adding 4 new stocks. But it's made the portfolio stronger. And I'm interested for feedback on this new format. We're not doing any strategy section at the start of this video and jumping right into the stocks. I think this makes more sense to have the strategy videos completely separate so they don't get lost in the mix of the portfolio reviews. We've got a lot of exciting content coming up, and some of our plans are to do an introduction on ELVA, Electrovaya. We're planning to do a deep dive part 2 on IREN as well. We will take a closer look at competitors, whether those are Bitcoin miners or neoclouds. Additionally, we'll review the latest earnings and talk about different software stacks. I've got one video coming up about reflections or a retrospective on 2022 and the challenges of dealing with that year as a growth investor. One more video in the work is strategy surrounding multi-baggers and some misconceptions around multi-baggers. We're always open for suggestions as well on video topics. So if there's something you're wondering or something you think we haven't covered yet, feel free to leave a comment. This concludes the video, and as a final reminder, this is not investment advice or recommendations to buy stocks. Thank you.